Hello, future millionaires, and welcome back to the Get Rich Slow podcast. I'm Adrian Shermer, and I'm joined today by Rob Delavan, Lance Johnson, and Sue Hort. This is part 2 in an 8-part series on making your 2021 filings simple, tax filings, of course. And I want to start off with a nice success story. Sue, congratulations. I know you completed your continuing ed.
Yes, I did.
Every year, each of us has to complete a rather lengthy process. It can be difficult to wade through, but it really keeps us up to date on all of the pertinent information in our field. So it's a good thing, but it's always a hurdle to be cleared, huh?
Yep.
Yes.
Love it. Also, I want to highlight our different websites to tell you ROI Financial, ROI Tax. I'm Adrian Shermer at Directors, and then my own Delavan-Realty. All of those links will be down at the bottom of the comments on this episode. And the specific event I'd like to highlight that it will be on all of our websites is actually the fact that we have calendared out everything that we're doing, client-facing webinars, wine events, and some in-person socials. Lance, am I missing anything here?
No, just the BNI group.
It's
we
BNI
set up
events.
Kind of a business networking events at our LO office. So we're excited about that.
Yeah. So all of that is actually calendared out through the end of the year. And we will have those linked through our websites. So just happy to have that done. And hey, it's only February, right? So we know what we're doing next December.
Right.
And so, Adrian, what are we going to experience today?
So in this episode, we're going to be speaking with Sue at ROI Tax, and she's going to teach us how to make our 2021 filings simple. Like I said, this is part 2 of an 8-part series. We're going to do lots of stuff as we move through. In our last episode, we got to know Sue a little bit, who she is, what a CPA is, and what it means to work with one who's a professional like Sue. And now we can kind of dive into a little bit more nitty-gritty stuff.
Okay. So, Sue, thank you again for being here with our normal hosts, the three of us, Lance, Adrian, and I. We want to warmly welcome. We love your experience, decades, the jazz hands, right? And we want to specifically talk about a few questions for you, but the background for you, which we already covered last time, but you've only been doing this, you're going on your 3rd decade now, something like that.
Yes.
And that's all, no big deal.
That's
I would say she's our expert content witness when it comes to this episode, right?
Yes.
So we're excited to learn about how to keep our 2021 filings simple. Mm-hmm. And get some of the questions answered that are coming through. I know you're hearing them all the time, every day. So question 1, you're getting a ton of questions in regards to the child tax credit. Do you know if receiving the advanced child tax credit will cause any kind of delay or complications?
only if you don't report it accurately. So here's the deal is most people who were eligible just started getting advanced child credits monthly starting in July of 2021. And it was either, 300 per child if their child was under 6, or it was 250 per child if their child was 6 to 17. Okay. And as they got that, it reduces what their credit is on the back end. So for 1 year and 1 year only, they raised the child tax credits to, like I said, $3,000 for kids age 6 to 17 and $3,600 for kids 0 to under 6. So then they gave part of it in advance, half of a year, and then they're putting it on the tax return, but it has to get reconciled, reduced by what you already received. Now, there was a lot of issues last year when they gave the stimulus and people reported what they got. People didn't remember too well. And so it caused a lot of problems, and there's a lot of backlog at the IRS. So this year, the IRS sent out letters in January. There was letters to people that said, here's how much we gave you for your stimulus. And then the second letter was, here's how much we gave you in your advanced child credit. As long as you hang on to that and give it to your CPA or use it when you're filing and do that reconciliation, then there's no holdup on your refund. And that's why the IRS said, file early, file electronic, file accurately, and use direct deposit. So the accurately, they sent out that letter to help you reconcile and be accurate. So I think we've got a link on the IRS that you can learn more about that. If you understand IRS lingo. And
really
if
care.
not, you can talk to me. But yes, Lance.
So on that link, is there a way, because I can see clients, all right, got the letter, but I moved, or I wasn't expecting it, I threw it away, I didn't recognize it.
Yes.
Is there a way to go individually go and see what letter was sent to you?
And I believe you can, because there is a place, I don't know if it's in this link, but there's a place on the IRS website where you can log into your own personal account and it'll tell you those things. It'll say, here's how much you got as stimulus. Here's how much you got in advanced child credit. And I apologize, I don't have that off the top of my head. But yeah, if you go on the IRS and say, how much did I get? I mean, I think it's even one of the topics that you can click on when you go to irs.gov. And that's the place to find this.
So maybe we'll add that link, because people that not sure could go there.
Oh, exactly.
Verify. And if that's the one thing that's going to hold up their return, that would be one thing to tell the clients to do as the IRS moves into the electronic age, is that we could verify, and then the happier the client is if we can verify that.
Well, and the quicker it goes, and then things move along smoothly for me and the client. So yes.
And,
awesome.
And just for reference for you guys, the website there is www.irs.gov/credits/deductions, and then 2021-child tax credit and advanced child tax credit payments topic, a general information.
Right, but if you go right there, stop, Rob, view your child tax credit payments. Click on that and away you go, and you'll find it out. Or if it's the same with the stimulus, get your stimulus status. It'll tell you how much you got, when you got it, all that stuff. So it's trying to help you. So it's right there.
Excellent. So question number 2 I have for you, Sue and Lance. So with these changes to child care tax credit, what can be done to, proactively make this process easier? And you dug into that a little bit, Sue, with kind of the changes, but how would that affect how you do tax planning and specifically run through those changes again? And you'll both have your own interesting take on it.
Okay. So we talked about the child tax credit and, like we said, the advanced credit and all that kind of stuff reconciling. But there was also some changes to the child care credit, the dependent care and for 2021. And so they raised those limits to be able to allow to be more realistic. I mean, honestly, for one kid, they only had $3,000 and 2 kids was $6,000. It's like, no, that's not what people pay. I mean, I received my daughters for 1 child this week, and not realistic at all. So they raise those limits so that people can get more credit. And again, I'm not going to give you every detail, but you can find it on the IRS website. We'll put a link. I can put things on our websites as the ROI taxes items you would be interested in. And as far as your other question kind of talked about simplifying my process, and we alluded to it in our last question, but to reiterate, making sure you have all the documents, keeping things that say important tax document, or you get an organizer, or I've also started sending out generic tax list. And so I sent to some people that said, here's anything and everything you could possibly get, just
Mm.
throughout the year, putting things in there that you've done, stock sales, donations, all that kind of stuff. And these type of things with childcare
Mhm.
credits or whatever. And then as soon as possible, uploading that, dropping it off, scanning it in to get to us makes our job easier. So we're not chasing after you to get information. And if my job's easier, we get your taxes done faster, the refunds on the way, or it's just out of the way. You don't have to
Mhm.
worry about it for the rest of the year. And you can move on to tax planning, which is the more interesting and exciting process. So this is like smooth, simple, and a no-brainer. And taxes become not a worry and a chore and a burden, but just, okay, here's what we do once a
Mhm.
year.
Mhm.
It's a good thing. So that's my take on it.
Yeah, and I would add something to that where with these changes, there's always like income phase outs, one person might get the full benefit, another person might not get any of it. And
Yeah.
so
Mhm.
being on less of the compliance side, more of the planning side, year-end tax planning really kind of helps address some of that. So there's this game that we play that everybody has a tax liability, and then you match up your withholdings to get a slight refund or a slight but the closer to zero it is with all these changes, we want people to know that in the fourth quarter of the year before, so
Mhm.
they know they're close. And ideally, we always try to position clients with a slight refund on federal and state, but we're having that conversation in the fourth quarter of the previous year so that there's less anxiety of all these changes coming in. Now, sometimes we don't know all the changes, but we know they don't get solidified until after the first of the year,
Mhm.
but they're talked about. And then if we're close on the base stuff, then there's small enough changes. And then in the planning, like if we look at dependent care, there's all sorts of questions in the planning side. So how much is that's now more realistic? And then how much of it is dependent care credit versus pre-tax with your employer? That conversation needs to happen in October, November, or you lose a whole year. And so that tax planning, if you have dependent care, we just would encourage you to engage Sue and I in tax planning in October, November during open enrollment, so we can help you make those decisions that have to be done there for a future scenario.
Yeah.
Yeah. And so that's what I would add. Planning becomes, clients are happier when they know their bill in October and November for the next year in April. They're just happier, and then they're able to make adjustments before 12/31. That would be my take.
So the third question I have for you, Sue, is how will the stimulus checks affect my taxes?
Okay. In theory, it shouldn't be at all. Okay, so
In theory, right? In
yes,
practice.
you either got it or you didn't. Okay, so here's what goes on. Everyone who was in the income threshold would have got that last year. Okay, so the one for 2021 was $1,400 a person, husband, wife, child, that type of thing. Okay, so the IRS, trying to make this easier, has sent out these letters in advance that says, here's what you got. Okay.
Okay.
So you bring that to your tax person and they enter that in so that there should be no problem reconciling that. Now, I did have a situation just the other day where somebody didn't get their stimulus because their income for 2020 was well above the limit that they could have got it. 150,000 is the limit. Okay, for a married couple, sorry, and 75,000 for single. But this year their income was down because they had an unusual capital gain situation in 2020 that caused them to be over 200,000. But this year, their income was back within range. They dropped below 150 and boom, that 2,800, 1,400 for each of them showed up on their tax return. So how does it impact? It's either going to be, you got it last year, or woohoo, we got it this year, and you get some extra money. So it doesn't play into Oregon. So there shouldn't be any issues with that for this year. If we're talking to Oregon people, or I don't know specifically about other states, but yeah, you either got it or you didn't. You get a letter from the IRS, maybe your income dropped and you get it this year. That's the most that should happen with the stimulus.
So it's kind of interesting at that point. So I love the woohoo, because what happens is if you got it, okay, then you just got it during the year and it shouldn't affect your taxes. If you should have gotten it, but you didn't because you didn't qualify, but you qualified from the previous year, and we did planning, and let's say you just get a slight refund, $200. I'm just making something up. You get the woohoo is, well, I didn't get it and I should have gotten it, so I'm going to get a higher refund. And that's always kind of a psychologically a better scenario versus
it's bonus and everybody loves the wins.
Now there is a situation just a little bit where some people have a reluctance of having their refunds direct deposited or taken out of their account. And sometimes that is a better, because I've seen situations, and not everybody's going to agree with me on this, but like if you had your refund or you owed taxes come out of your tax return on a certain day, then the IRS knows how to deposit it into your bank account. And there is a lot less work on the clients and the CPA's part having that automatically done. And so then there is issues where, hey, I had that bank account last year, but now that bank account is closed, or I did the paper thing, didn't recognize the check, I moved. There's just all sorts of scenarios, but I know electronically, if it happens, it seems to be a little smoother if you can set that up.
So the last question and final thoughts here is, what would you recommend clients do to allow you to serve them better, Sue, and Lance on the tax side, Sue, and basically to process things more efficiently?
Okay. Well, I discussed a little before about that in another question, but just reiterating, of course, is have your documents, have them ready, and get them to us as soon as you can. Being able to have them up front, process them, get to like 90%, and being able to have them come in and do an appointment, and we can discuss maybe some other options that they can do, and I can refer them to Lance on the financial side. It just is going to make the process go smoother, and things go easier, and then having some other things to be able to do financially. But getting the documents, getting them early, getting them processed, that helps things go smoother on our end.
On our side, the CPA is more on the compliance side, getting everything done, obviously in a timely fashion. We're on the planning side. So when somebody does planning and they know they're going to get a $200 refund, and they were able to utilize all the benefits during the year, a lot of them have to be done before 12/31. Clients feel like we're being very proactive versus reactive, and that always sits better with clients. No client wants to learn that in March or April they owe money, but if they just sat with us on November and they could do 2 or 3 things to reduce their tax liability by $500, $1,000, $2,000, that person is always going to feel a lot better that we did everything we possibly could. It's just February, March, April is not the time to do that. I mean, you still want to do it as much as you can, but the choices are a lot less. And so we find that the attitude of a client is much better if we really address that. Then when we actually do the taxes, you know, anytime you can get the data beforehand so that when Sue meets with you, you're 90-something% done with your tax return. Instead of bringing the stuff to her, I'll watch clients bring stuff to her on that meeting. That particular half an hour and 45 minutes with Sue is so valuable. I don't want to waste it with her and the clients with just delivering data. I want to utilize that 45 minutes during February, March, April, where 95% of the tax returns done compared to the year-end taxes. And we're just strategizing on what you could do today and what you could do before April 15th and what you could do in the current tax year to change the tax law. That's the best use of Sue's time with that client. So if we can get the data ahead of time, we'll have that tax return almost completed. And then there's less backlog of stuff that needs to be completed before April 15th. And for any CPA's health, the less that they have to work 90 hours to do silly stuff versus 90 hours to do impactful stuff. I just watching the clients walk out of there that do that, they are just ridiculously happier.
So for all of those procrastinators out there, it does not serve you well.
Well, so this is actually a great point. So not everybody has to file by April 15th. Yes. So what happens is if we identify clients that need a little bit more time because they're procrastinators, but we did year-end tax plan and we're in a position to have a refund, then you've covered your liability. You don't have to file by April 15th. You could extend because you already covered your liability.
Right.
And then you could take a little more time to identify the planning aspect. But if you owe, the pressure's on her to figure out how much you owe to get you to a refund side. And I think from a client compliance standpoint, if we know that in October, November, and you are kind of a procrastinator, then refund or extending is not an issue for those clients. Right. And I think it just sets up the expectation a lot better for Sue and the client.
I would add one more thing that I don't even know if I should say is, if you come to me April 1st and ask me to complete it by April 15th, it's like, do you want April 1st zombie CPA, or would you rather I was fresh like February and I'm happy to see you? So yeah, I don't think you want zombie your taxes.
Does anything ever benefit when you're dealing with a zombie? I mean, has it ever worked out well?
No.
I don't know a movie that ever has done that.
No, protect your brain. Yes.
Exactly. I love it. Well, thank you so much for all of this information. This is huge. Obviously there's a theme here. You know, we want to get ahead of the curve. But Sue, this is huge value for our listeners, and Lance also. The best way to find Sue is visit her at her website, www.roi-tax.com. And that again will be linked to the notes below. And we have another 6 more episodes on this one. So please stay tuned. 8-part series, right? Adrian,
so
you
excited
jazzed?
about taxes. I really am. I wish I could say that I'm joking, but I'm not. It's good info, and it'll save you money, it'll save you time, and it might save you a little bit of sanity.
So episode 3, just a teaser here, we will be learning what to expect in 22 when it comes to your taxes. So love it. Thank you guys all for being here.
Okay.
Nice job, everybody.
Catch you next time, folks.